Welcome to the Deep Dive. Today we're navigating the world of Adani Ports and Special Economic Zone Limited, or APSEZ.
Right.
Now, the name might suggest just ports, but the documents you, our listeners, shared show, well, a much bigger picture.
Absolutely. It's a significant network, lots of infrastructure, and substantial financial activity.
Yeah, you sent over some great materials, the audited financial result announcement.
Yep, that one, plus the investor presentation and the independent auditors' take on their debenture security cover.
Exactly. So our mission today is to kind of distill the key insights, right? Financials, strategy, future plans.
Without getting totally lost in the weeds, make it clear and engaging.
Okay, let's dive in.
Yeah.
Starting with the financials for the year ending March 31st, 2025.
Okay.
The board approved these on May 1st. Meeting started at 10:03, finished about 12:15 p.m.
Pretty efficient. And importantly, the auditors, Mrs. MSKA and Associates,
Yeah.
they issued audit reports with an unmodified opinion, both standalone and consolidated.
Unmodified. That's generally good news, isn't it? Means they think the numbers are, well, presented fairly.
That's the gist of it, yeah. Based on accounting standards, they believe it's a fair view. Gives us a good baseline of trust.
Okay, good. So let's look at those consolidated numbers then. This includes APSEZ plus its, 157 subsidiaries?
That's right, 157. So total assets as of March 31st, roughly 79,256.72 crore.
Wow, that's a big number. For context, a crore is 10 million rupees.
It is substantial. And total revenue for the year, consolidated again, about 8,758.200 crore.
Okay, and profit, net profit after tax.
Came in around 11,144.36 crore for the year across all those entities.
That profit figure, how does it compare? Is that an improvement?
It is, yeah. It's a notable increase from the previous fiscal year. Seems driven by strong growth in ports and logistics and, better efficiency overall.
Shows the scale, definitely.
Yeah.
Now, what about just APC itself, the standalone results?
Right, just the parent company. Revenue from operations was 7,910.69 crore.
Okay, still very significant. And standalone net profit after tax?
That was 2,457.15 crore.
Huh. So the standalone profit is actually higher than the consolidated profit. How does that work?
It suggests the core port and SEZ business of the parent company is particularly profitable. The consolidated figure includes results from all subsidiaries. Some might be in investment phases or less profitable, pulling the overall number down slightly after adjustments.
Got it. Makes sense. And something shareholders probably noticed, the dividend recommendation.
Yes. €7 per equity share for FY25.
That's up from euros the year before.
It is. Often signals management's confidence,
Yeah.
in profitability, future cash flow. It's a way to reward investors.
Right. Suggests they feel they can invest in growth and return cash.
Yep.
Okay, moving on to some key decisions.
Strategic moves.
Yeah. First, the reappointment of Mr. Palamadai Sundarajan Jayakumar as an independent director.
Right, for a second term of 3 years, starting July 2025. Needs shareholder approval, of course.
He got quite the background. Chartered accountant, XLRI, Citibank, former MD and CEO of Bank of Baroda.
Yeah, co-founder of a couple of finance companies, too, sits on other boards. Impressive resume.
What's the significance of keeping him on? Continuity, expertise.
Both, likely. Especially his finance and leadership background. Useful for a company expanding like APSE. And crucially, they confirmed he's not barred by SEBI or anything. Good governance check.
Okay, another decision altering the Articles of Association to delete the clause about the common seal.
The common seal. Sounds a bit archaic, maybe.
Feels like it. Is this just modernizing?
Pretty much. Historically vital for documents, but now there are other, often digital ways to verify things. Streamlines the admin. Needs shareholder approval, too, though.
Right. Now here's a big one, seems like. The board approved the acquisition of Abbott Point Port Holdings P. Ltd. That's based in Singapore.
Yes, APPH in Singapore. But it holds the Australian port asset.
And the enterprise value is huge, AUD 3,975 million net of liabilities.
It's a major investment. And note the consideration, they're issuing over 143 million new equity shares.
So, not all cash. Uses shares instead.
Right, conserves cash, but it does mean a bit of dilution for existing shareholders.
What's the strategic play here? Getting into Australia.
Absolutely. Abbott Point is a major coal export terminal, gives APSEZ a significant foothold there, diversifies their geography, their cargo mix, less reliance just on India.
Interesting. A big step in their global ambitions then.
Definitely looks that way. We'll have to see how the integration goes.
Okay, now let's address something the auditors highlighted that short seller report from back in FY 2022-23.
Ah, yes, the Hindenburg report context. The auditors included an emphasis of matter note about it.
Just to remind listeners, that report made some serious allegations.
It did. So the auditors are basically saying, hey, this was a significant issue. It's been looked into, but our opinion on these financials isn't changed because of it.
And APSEZ management, they conducted their own review, right? An independent one.
Correct. They commissioned an independent legal and accounting review looking into those alleged transactions and relationships.
And their conclusion.
According to the documents, management's view, based on that review, was that there were no material non-compliances with applicable laws and regulations.
Okay, that's their stand. And their note also mentions the Supreme Court.
Yeah, it mentions the Supreme Court disposed of appeals related to the SSR back in January 2024 and directed SEBI, the regulator, to finish the last two investigations.
And management believes those were wrapped up by December 2024.
That seems to be their belief stated in the report.
So the key point from the auditors is that this historical issue doesn't modify their opinion on the current financial statements.
Exactly. They're acknowledging the history and the reviews, but it doesn't change their view on the fairness of the FY25 results presented. Still, past events can sometimes linger in terms of reputation.
Understood. Okay, digging a bit more into the consolidated auditor's report. They mentioned including financials from 157 subsidiaries and a branch.
Yeah, plus some unaudited ones from an associate and joint ventures. It just underscores the sheer complexity of the group.
Managing all that must be a task.
No doubt. And they mention relying on other auditors for many of those entities, which is standard practice for a group this large. The assets and revenue tied to these subsidiaries are substantial.
They also noted that some international entities use different accounting rules.
Right. So APSEZ management has to convert those financials to Indian standards for the consolidated report.
Requires careful handling, I imagine.
It does. Needs expertise to ensure everything aligns and is comparable. The auditors flagged they reviewed this process.
And similarly, in the standalone report for just APSEZ, they mentioned one branch outside India whose financials were also converted by management.
Correct. Same principle ensuring consistency in the final reported numbers, regardless of where the operations are.
Okay. Let's shift to developments during and after the reporting period. There was news about a U.S. DOJ indictment and an SEC complaint against an executive director. November 2024.
Yes, that was mentioned. But the crucial clarification from the company is that APSEZ itself is not named in those matters.
Right. And they state there's no impact on the financial results.
That's their position. So, seems like a legal issue concerning individuals separate from the company's financials, according to them.
Got it. Then there were some exceptional items listed.
Things like voluntary retirement plan settlements, one-time payments to employees in FY25.
And similar things in FY24, plus a currency reserve reclassification. These aren't day-to-day operational costs, right?
Exactly. They're separated out because they're unusual or non-recurring. Gives you a clearer view of the underlying sort of core business performance.
Okay. And quite a bit of M&A activity noted.
Yeah, seemed busy. They divested a 49% stake in the Adani Ennore container terminal.
For a decent gain, it looks like.
Yeah.
603 core consolidated gains.
Something like that. But then they acquired stakes, too. 95% of a terminal in Tanzania.
Right. Tanzania East Africa Gateway Terminal. And Gopalpur Ports Limited?
Yep, 95% of Gopalpur Ports, too. Enterprise value around 3,080 crore. That resulted in some goodwill on the books.
And Astro Offshore Group.
80% stake acquired in a previous quarter. Plus, they incorporated a new marine services company in Qatar with a 49% stake.
Wow. Selling some, buying others, starting new ventures. Seems like active portfolio management.
Definitely. Looks like they're optimizing assets, maybe freeing up capital with divestments, while expanding geographically and into related services with the acquisitions and the Qatar venture, reshaping the portfolio.
Okay. And lastly, in this section, a mention of a composite scheme of arrangement involving a few related companies approved by the NCLT.
Right. Savi Jana Seafoods, Adani Harbor Services, Shanti Sagar International Dredging.
What's the usual purpose of these complex schemes?
Often about restructuring within the group. Could be merging entities, demerging parts of businesses, usually aimed at streamlining operations, maybe unlocking value, or creating a more logical business structure. The NCLT approval is a key regulatory step.
Makes sense. Okay, let's switch gears to the security cover for APSEZ's debentures.
Ah, yes. That separate report from MSKA and Associates again.
This is specifically for their listed, secured non-convertible debentures, right? Totaling over 5,485 crore.
Correct. It's about checking if the assets pledged as collateral are sufficient to cover that debt, protecting the debenture holders.
And the security comes from APSEZ itself and a subsidiary, Adani Tracks Management Service.
That's what the report indicates.
But how did it look? They highlighted some key ratios. Net gearing.
Came in at 0.71 as of March 2025.
And the covenant, the limit, was less than 3x.
Correct. So 0.71 is well below that limit. Suggests a less risky financial structure, less reliance on debt versus equity.
More financial flexibility. What about the DSCR, debt service coverage ratio?
That looked very strong, 6.07.
And the requirement was just over 1.9x.
Yeah. So a ratio of over 6 means the cash flow generated from operations is like 6 times what's needed to cover their debt payments for that period.
So very comfortably meeting debt obligations.
Based on that ratio, yes. Significant margin of safety.
Okay, good to know. Now let's look at that investor presentation. It gives a much broader view of the Adani portfolio.
It does. Positions it as this world-class infrastructure and utility portfolio. Covers everything from renewables, T&D, gas.
To ports, airports, roads, data centers, even cement. It's massive.
Truly diversified. The message seems to be about integrated, long-term growth tied to India's infra needs. They also highlight the Adani family's stake across the companies.
They mentioned a diversified source of capital. Why emphasize that?
It's critical for funding these huge projects, relying on banks, bonds, institutional investors, both domestic and international. It reduces dependence on any single source, gives them stability and flexibility.
Makes sense. The presentation also shows their strategic presence, land bank, across India.
And impressive growth in cargo volumes, both for APSEZ and India's ports overall, underscores their market position.
Yeah. And they talked about ROC, return on capital employed.
Right. Improving at their mature ports, and they expect a good ramp-up at the acquired ports, aiming for around 20% ROCE there eventually.
Suggests they're getting better returns on their investments, becoming more efficient.
That's the implication. Successful integration, operational improvements leading to higher returns, efficient capital use.
And the debt maturity profile looked okay too. Funds from operations exceeding loan repayments.
Yeah. FFO covering repayments is a key sign of health. Reduces refinancing pressure, shows they can manage liabilities internally.
And they've kept their investment-grade credit rating, despite all the growth in spending.
Very important. Lower perceived risk means access to cheaper capital, which is vital for funding future growth.
The presentation also really pushed their logistics, footprint, trains, parks, warehousing, trucking.
Yeah, the whole integrated value chain, offering end-to-end solutions, not just the port. Captures more value, makes them stickier for customers.
And finally, they summarized APSEZ's unique points. Largest operator in India, strategic locations, hub-and-spoke model, integrated services.
And a big focus on sustainability, that net zero by 2040 goal.
That's ambitious. Catches the ESG investor eye, I suppose.
Definitely. It differentiates them, appeals to stakeholders beyond just pure financials. Adds to the long-term story.
And they wrapped up by showing performance against their own guidance from FY21 to FY25 cargo revenue, EBITDA, ROCE.
Always good to see companies tracking against their own targets. Shows accountability, helps assess their execution.
So, okay, wrapping this deep dive up, key takeaways seem to be strong financial performance overall.
Strategic acquisitions shaping the portfolio, key director reappointed.
The auditor's view on the SSR seems resolved for now. Debt profile looks manageable based on the ratios shown.
And really ambitious growth plans with that sustainability angle layered on top.
It paints a picture of a very large, dynamic company firing on many cylinders.
That's a fair summary based on these documents. Strong financials, clear strategic direction in infra and logistics.
So here's final thought for you, the listener, to mull over. For a massive infrastructure company like APSEZ, growing this fast, how do they balance that rapid expansion with maintaining, long-term financial stability and health?
It's the fundamental challenge, isn't it? Balancing growth ambition with financial prudence.
What factors, based on everything we've seen today, might be key to them successfully navigating that balance in the future? Something to think about.
Indeed. We encourage you to look back at the sources if any particular area caught your interest.
Absolutely. Thanks for joining us on the Deep Dive.